Thank you for joining us again. This is Sage from Kalkine as we bring you the Australian mid-market report. Inflation edges higher, ASX stocks lower at noon. ASX shares opened lower as weakness stemmed in materials, energy, utilities and healthcare shares. Iron ore prices were tracking lower in China as the country seeks a lower steel producer for carbon neutral goals. However, ASX miners including BHP Group, Fortescue Metals, Rio Tinto were lower on Wednesday. Rising iron ore prices have pushed ore miners to record levels because of an expected rise in earnings and dividends. Profit booking seems to be at play today. Overnight in the US, the Dow Jones Industrial Average and S&P 500 closed marginally lower on Tuesday. Bipartisan groups are showing concerns over the US $1.9 trillion planned stimulus from the Biden administration. Federal Reserve will also release new policy statement as the central bank begins its two-day meeting on Tuesday. Microsoft reported earnings beat after the bell on Tuesday. Its revenue grew 17% on a year-over-year basis. Facebook, Tesla and Apple will report earnings on Wednesday after the bell. The International Monetary Fund also raised the global growth forecast of 2021. It is now expecting the global economy to expand 5.5% this year, which is 0.3 percentage point rise from the October estimates. Vaccinations have driven the institution's expectation, but the IMF was also cautious on new variants of the virus, which can propel uncertain economic conditions. Given the increasing restrictions by governments to curb infection, the economic pain appears to be intensified. As a result, the IMF lowered growth expectations from the Eurozone. It also cut growth prospects of the European Union's last economies, and the region is estimated to grow 4.2% this year. In other market news, the Australian Bureau of Statistics also reported inflation for the December quarter. The number printed by the authority came at 0.9%, which was higher than the market expectation. A surprise beat on the upside will raise the expectation of rising rates. A rise in December was driven by rising tobacco prices due to hikes in excise. An unwinding of government subsidies in childcare added to the rising costs of childcare services. Reserve Bank of Australia will hold the next meeting on the 2nd of February 2020. The bank currently seeks inflation to be in the range of 2 to 3% per annum. Reliance Worldwide shares were the highest gainer at noon after the company provided an update on earnings. Other gainers in ASX 200 index were Pro Medicus, IDP Education, the A2 Milk Company, Charter Hall Long Whale Right, and at noon, 7 out of the 11 subsectors in the ASX 200 were lower, led by Fortescue Metals, consumer staples, information technology, financials and consumer discretionary were higher. Thank you for joining us. This is Sage from Kalkine.